Welcome to Sectors Up Close. I'm Elena Casas. Today we're talking US commercial real estate, and my guest is Anna Lai, Senior Director of Real Estate at S&P Global Ratings. More than 3 years after the pandemic emptied offices, workers across America are still reluctant to come back. 18.5% of office space in the US was empty last month, and the real estate investment trusts that own many of these office buildings need to refinance between $137 billion of office mortgages this year and nearly $500 billion in the next 4 years. That led Federal Reserve economists to warn in a recent report that commercial real estate could be the next major hole in banks' balance sheets as rising interest rates raise the prospect of a correction in property values. What about the shares in those REITs then? This is the Dow Jones REITs index. Unsurprisingly, it's down 1.8% year to date and more than 10% over the last year. Well, for more, I'm joined now by Anna Lai of S&P Global Ratings. Anna, hi, thanks for joining us. To start with then, have we seen the fundamental shift to work from home? Have we seen the impact that will make in the commercial real estate market? Or actually, could this market still deteriorate further?
Thank you, Helena, for having me on the show today. So we do expect the fundamentals in the office market to deteriorate further from here. As you mentioned, vacancy rates already at its peak at about 18% currently, and this could go up a bit further as the remote working impact is going to drive tenants to really reassess the space need. So we do think that the fundamentals could deteriorate a bit further from here.
How bleak then could the outlook be for commercial real estate REITs?
Well, we currently have a negative outlook on the sector. We rate about a dozen office-focused REITs, and we downgraded a few of them in recent months. We currently have about 50% of them on negative outlook, which means that there's at least a third of a chance that these ratings could come down further.
Are there any bright spots in the commercial real estate space?
Yes, we do think that there would be a continued flight to quality, meaning that Class A assets will perform better than Class B assets on average, as tenants who are looking to move out or resize their space are looking for higher quality properties with better amenities. So we do think that Class A properties will outperform Class B properties. And generally, the REITs that we rate tend to own Class A properties that are better quality.
What about REITs who need to refinance their debt in the next few years? Lots of mortgages are now coming up for refinancing. How badly are they likely to struggle to find credit given the state of the market?
Yeah, we do expect that the credit quality in the real estate sector to deteriorate given the rising rates. But for the office sector, given the value pressure that they're seeing, that lenders would be more cautious. So we do think that refinancing will be challenging in the next few years, not only because of much higher rates, but also valuation pressure.
Is there a risk then that defaults in this space could start to prove a problem for the banks that have these commercial real estate loans on their books?
I think it's a bit too early to tell in terms of how that would impact the banks, because I think we are still facing a period of price discovery. So depending on the bank's appetite for debt, whether they choose to extend these loans or amend these, that would kind of dictate the potential for the impact on their own balance sheet. So we are watching closely those trends.
What about the shareholders in REITs? How should they be approaching the space at the moment, given how complicated it is?
We've seen tremendous pressure on office REITs prices currently. They are trading at a wide discount to net asset value. So raising equity would be very difficult for these REITs. So I think the shareholders for now, they remain very cautious.
Well, thanks so much for that insight, Anna Lai, Senior Director of Real Estate at S&P Global Ratings. Well, that was our roundup of the US commercial real estate sector. I'm Elena Casas, and this is Reuters.